Good morning, guys. I'm glad you're here. So let's do it. So we have new jobless claims, of course. The big Fed decision yesterday from Jerome Powell and his gang. Inflation, that's big news. And now I was seeing something, and I'm going to pull it up in a little bit. Is there a new market story that's going on? Is China trade back? And of course, I'm going to take your questions next. All right, let's do it. So first thing I want to look at is the yield curve, as always. And if we're checking, we're seeing that our 3-month is coming down. I just don't know, guys. You're getting paid 0.02% for lending money to the government. And I just want to go back. I want to go back to 2019 just to show you guys this. If you were to do a 3-month yield, a 3-month treasury yield back then, you were getting 2.5%. Yeah, I mean, this is insane, but we'll see what's happening. Pierre said that the, what did he say earlier? I was watching this, the 10-year, it spiked up overnight. Yeah, I want to know what it spiked to because I'm seeing that it's pretty consistent, 1.63. I think I read that it's 1.72, but I digress. Let's see what happened with jobless claims this morning. So we're saying that they were expecting 700,000 jobless claims. Of course, it came in a little bit higher at 770. I mean, I don't know. It's consistent. I mean, we're seeing what we're seeing. I don't really think that we're going to see jobless claims going back to 2019 levels, which were about 200,000 per week for quite some time. It's not only people have to go back to work, jobs that were lost, especially the restaurant industry, that is going to be a big player in this. The restaurant industry is going to be a very big player in this because, I think that restaurants are one of the biggest employers in the whole United States. And for as many restaurants went under, it's going to take some time for those restaurants to come back. Of course, not in their old form, but as new restaurants. So the good news is it's the 4th consecutive week that we're under 800,000. So we ticked up a bit, but it's still coming down. I do think that as more vaccine talks come out, I know that the White House has said that by May 1st, everybody will be able to get a vaccine shot if they want it. And I think that just that psychology of it will help businesses get back to working and get people going back to work. So again, I just want to point out that we are seeing others saw new claims retreat after a few weeks. Ohio, which has been contending with a recent stretch of fraud claims, saw initial jobless claims fall by more than 14,000 last week. So maybe it's getting better in Ohio. Let's see. Let's go to our Fed talk. So yesterday, of course, Jerome Powell came out and, well, the whole Fed came out and put out their forward-looking statements on inflation, on interest rates, and whatnot. And of course, Jerome Powell came out at 2:30 and spoke. So they've maintained that they're going to keep interest rates to 0 through the end of 2023. I was reading that there's 18 members on the board of the Fed. Back in the 4th quarter of last year, 5 of the 18 recommended that we increase the interest rates in 2022. Now that's 7 out of 18 members. So the suggestion for increasing rates is there. I don't think it's going to happen. And if it does, it's going to be a quarter point. And I could see, if they increase a quarter point, I don't think they're going to increase rates until they are ready to begin increasing rates. And they said that they're not going to increase rates until they get inflation over 2%. So the FOMC now expects the unemployment rate to tilt down to 4.5% by the end of this year, with inflation reaching 2.2%. And just in the 4th quarter last year, they expected 5% unemployment rate by the end of 2021, with inflation at 2. So it's kind of a counterbalance that they're going through. But again, this is the most important thing. They've made it very clear that they are not going to increase the interest rates until that inflation number hits 2%. So, hey, we'll see what happens. I'd like to know what your guys' thoughts on this. I mean, this is, we're living in some interesting times. That's all I have to say. Let's see here. Let's just keep talking inflation. So somebody was messaging me about bonds earlier today. But the bond guys are typically known as the smartest and most detail-oriented guys in the room. Bonds are very complicated. You guys know that Paul and I use Gary Mashurius as our tutor for investing, and he had us read the book Security Analysis. And there are not many people that have read the book Security Analysis the way that we read the book. There's been people that have probably read through the book, but they haven't read the book in detail like we have. When we got to the bond section, I read that chapter 3 times. It took me about 6 weeks to get through that bond section to be able to have some kind of coherent conversation with Gary about it. So bonds are very complicated. So when I see guys on the news and people out there just talking about understanding bonds, this and that, you don't understand bonds. Unless you're a bond guy like Mohamed El-Arian or something like that. And if you guys want to read about bonds, go and look up Mohamed El-Arian. He's an economist. He used to run PIMCO, which is a big bond firm. But what else did... here's a couple of books. When Markets Collide, that's a really good book. Yeah, When Markets Collide. So Mohamed El-Arian's great. If you want to learn bonds from a pretty elementary level, go for it. Go look at him. If you want to learn bonds from a deep level, I guess buy Security Analysis and start reading it and let your head spin and get a headache for about 6 weeks. Then maybe you'll figure out bonds. But yeah, that's about it for that. Okay, let's talk about gold. Everyone wants to know about gold. As some of you guys know, I have a very large position in gold, multi-six figures. But I love gold. I'm buying GDX and GDXJ. And I think it's a great bet to make. And you guys have to remember that when I do this, I'm looking out 2, 3, 4, 5 years. I'm not looking at this from I better get a return on gold tomorrow. I started buying this back in June of 2020. And I've just been building the position by selling options on it. I actually don't know what my position is right now, but it's multiple 6 figures. So my bet on gold is strong. I do believe it's going to do something. And this is the reason. Gold is used as the hedge inflation. People could say that gold is out, gold doesn't exist anymore, but people are saying the same thing about value investing, and they're saying the same thing about the cycles of the market and this and that. Everybody says that it's different this time. I can assure you it's not different this time. If you read history, it's never different this time. There's a book that I was reading. It was written in 1913. It was talking about the times of 1913. And if you just associate that with everything that's happening today in the social world of the United States, it's spot on. You could just replace it with any lobbyist special interest group you want to, and the exact same thing is happening. Very interesting book. It's called The Psychology of... I don't know. If you're in the Bid and Ask Nation, you know what it is because I shared it with you. And I gave the book to everybody. Okay. Let's see here. This is something that I pulled up, and I want to say for no other reason than... maybe we have a new news story that's going to drive markets. So, of course, it was always China trade, and then it went to coronavirus, and then it went to the past couple weeks have been tech and blowing up the NASDAQ. And now I see in the news that the White House is going to meet with China. So I say this for no other reason than maybe we have a new story come in, because that China trade was big news. It moved markets for about 18 months. Granted, it was a bit different because the previous administration was a little bit tougher on China as far as trade went and tariffs and whatnot. We'll see what's going to happen. I did read that there's no agreement that's going to happen. This is a one-off meeting, but I wanted to point it out because maybe China trade is going to come back to the forefront. Who knows? Let's see. This one is one interesting one for the minions. You guys love Nikola, so let's talk about it. Nikola on Wednesday said that South Korea Hanwha Corp has decided to sell half of its stake this year, setting out to reduce its bet on the electric truck maker. And they have taken that money and reinvested it in a hydrogen-related business. So it's not ending its deal with Nikola completely, but it's a bit different. They did have a 5.65% stake, and let's see, planning on holding out. So what's the market cap of Nikola right now? Where's my internet? Let's see, Nikola. I was checking to see if it was one of the 5 big movers of the day. 6.42 billion. Okay, so it's nothing crazy, but that's what it is. We'll see what's going to happen with that, and we'll go from there. But one thing that I did want to mention to you guys, and I'm going to share this link with you in the chat. Baba is interesting. All right, I'll go over Alibaba real quick in a bit, but this explains the repo market. So there's a story that came out that the Fed is going to be making a decision in the next few days to lessen their grip on banks, kind of make it a little bit easier for them with their liquidity. So this is something that was used back in the end of 2018 and really a ton in 2019 about repo markets. So they talk about repo markets all the time. This is an excellent video of explaining exactly what repo markets are and what banks do to maintain liquidity and maintain their liquidity requirements that have been pretty tightened since 2008 and 2009 because of everything that happened. So take a look, take a watch of it. I think you're going to really enjoy it, and we'll go from there. So we'll do some stocks. I want to pull up CAH real quick because, of course, we are in this as a group. Let's see here. Here's CAH. So right now, Cardinal Health is up 1.28%. And the reason that I want to show this is, hold on one second. What was that price at? Because my charts are not working at the moment. I did see a gap this morning, which was great. And I'll show you guys exactly what I wanted. And if you guys like this and this resonates with you, then come to the Bid and Ask Nation and trade this because we're making a lot of money on this right now. 58.68. So 58.68. So that's right. Let's say right here. So we're up here this morning. This is where our green candlestick is going to start. Now, what I was looking for yesterday was I want to change here to a line chart. This is my long-term chart over here. So what I was looking for, and what I'm always looking for, is first I want to come up through the sweet spot, which it was doing perfectly. And then I'm looking for these awesome W formations moving up with higher lows. So higher lows mean that I'm creating new support levels, and the stock is just building on me and building on me. And you can see that when we shot up here to this resistance area the other day, I said, I do not want to add right here. I want to wait for the stock to pull back. That is correct. I wanted the stock price to pull back on me, and then I wanted to catapult up. And that is exactly what I got. I got a little bit of a pullback, and now the stock price is moving up, creating another W formation and just more power. So today we're going to end up here, starting the morning. We're breaking through this resistance point. This is exactly what we're looking for on a long-term trade. So is it too late to get into CAH? So the most ideal time to get into a company is, thank you, Susie. That book was called The Psychology of Revolution. Let me blow this up for you. So the most ideal time to get into a company is when you're closer down to this 32% area around here. Let me draw that in blue for you. So this is where I want to get in. When my red line is through yellow, just like it was here, and I'm coming up. Because the reason is, when I start getting into this area, closing in on 80%, this is called the overbought range. Up here in the overbought range, we are, well, we're just that. We're overbought. The likelihood of making money at that point is rather low. So I can't say that it's too late to get into Cardinal Health, but it's not the most ideal time to get into Cardinal Health. Remember, chart reading and chart trading is all about giving yourself the best opportunity to make money. That's why I always say buy high, sell higher. I am not in the buy low, sell high game. I am in the buy high, sell higher, because I would rather, and guys, hit the like button. We have 38 likes and 128 watching. I would rather buy a stock here with the probability that it's a good engulfing candlestick moving up on me than something like this where I have, this is kind of slowing it down. I could be moving back like this on the next day. So I always want to be buying when the price is moving up on me, and I am always buying at the top of my candlestick. So that's exactly right, Kevin. He said, let me explain that. Good, great analogy that I came up with, but thanks for reminding me. So this area right here, which I call the sweet spot, is like your cookie jar. Actually, let's call this whole thing your cookie jar. When you are in this area, you are grabbing actual full cookies, okay? And when you're grabbing a full cookie, that is wonderful. When you get into this overbought area, it's like you're going into the cookie jar and just grabbing the crumbs. Why would you start grabbing the crumbs when you can grab the whole cookie? That is the best analogy that I can give when you are going and buying these stocks. You want to be grabbing things that are in the sweet spot, giving you the highest probability to make the most money. All right, McDonald's. Let's look at McDonald's. That is a stock that I've wanted to look at for a while. That's right. So yesterday, what McDonald's did, I did not like. They decided to, well, they didn't decide anything. What happened to them just happened. Let's see here. I don't like this candlestick that happened yesterday. And if you go to the Trading 101 series and the Everything Money YouTube playlist, you can see that this kind of candlestick is not ideal. All we do is just have a long wick. So we actually started the day right here at this price. We moved all the way down and moved up to this point, and then just ended the day where we were supposed to. Now, today, the nice thing is that we are getting through the sweet spot very nicely. We're over all four of our 100-day moving averages, which I like. We are getting, I mean, McDonald's has extremely consistent volume for the last month. So what I'm going to need here is a green engulfing candlestick to move up on me like that and take out the high from yesterday. That's the only way I'm adding to this thing today. Your bid and ask difference is 28 cents. Of course, we're pre-market, so let's not worry about that right now. Let's see what happens after we run, after we get through 9:30. But is it shorting time? Shorting time on what? Not McDonald's. So that's what we're going to do with McDonald's. I told everybody in the Bid and Ask Nation that we're going to keep a watch on McDonald's, keep a watch on Starbucks, because when stimulus money comes out, people have extra money to spend. They go buy, well, first of all, I mean in normal times, in my opinion, they go to malls, they go shopping, and then they stop at those fast food places. I have a friend, I don't know if he's in here right now, but he bought a PlayStation 5 or something yesterday. I really don't know, with his stimulus money. For the record, he doesn't need that stimulus money, but I digress. So with GM, somebody brought this. Wait, was it GM this morning? No. Hey, if you guys are in the Bid and Ask Nation, what was the stock we were talking about this morning that I said I might get into? Arthur, I think I told you that I would do Pfizer today, so I'll do it for you. All right, let's zoom out here and see what we got. Yikes. So, DD. Yeah, I'll do DD. All right, so with Pfizer, you got another one of these 50% rule stocks. If you don't know what the 50% rule is and you're new, you have your high, your 2-year high, 2-year low, and then you have this middle range where there's a lot of resistance. And you can see, even though Pfizer has done a good job moving in and out. And of course it has had big movements because it's all this vaccine talk. They were big on the scene. So you can, every time it tries to break out, it kind of pulls back and tries to get out again over that 50%, pulls back again, pulls back. Even this time, it made an incredible run. You were thinking it was getting out of its 50% rule, pulled right back down. So this just shows you how powerful the 50% rule is. So you have to be careful. If you're going to trade this, when you start getting into this range here of, say, $40, and you start getting into the 42 range, if it breaks through, you have to be very cautious and start taking profits on it. Another negative is you are below all four of your major moving averages. Here's your 25, 50, 100, and 200. So this is just a lot of resistance to get through. To be able to get through 100 and 200 day that are right on top of each other, that's like trying to get through 10 feet of concrete. The only thing that's going to get you through that is green, a volume candlestick like that over the average, consistent days in a row, but this needs to be green. So that's going to be very difficult. Now let's just see it from getting in now. So I do like that we have broke over this 32% line with the red. So we're moving into the sweet spot very nicely. I really like that. What would I need? I want to see green candlesticks like this that are breaking out kind of like that. So yeah, that's it. You got to have green candlesticks. You got to have good volume. That's the only way that you're going to do something with this. But just keep a watch on it. DD I want to do next because DD is potentially a bid and ask nations stock, and I might trade this thing today. I might. Let me see. Let's see here. Where's my thingy? I just want to check what they're doing as far as pre-market. Okay, they're down. So as of right now, I'm not going to do anything. I'm going to wait till 10:06 and see what happens. But I really like that they're coming through the sweet spot. I hate their volume. Terrible. But I do like that they're through all four of their major moving averages. If I can get a green candlestick that breaks out like that and like that, I will put a position on this today. So if you are in the bid and ask nation, stay tuned. We might do something with this. And I think that I will get a run up to this just below 87 point. Let me zoom out real quick. I was looking at this at like 6 o'clock in the morning. Yeah, that's when we get to this point. Shoot. When we get to this point, oh my goodness, I don't know why it keeps glitching like this. I am going to face resistance here. I highly doubt that we're going to get through this level unless there's some good news that comes out or something. Yeah, I don't know. What's the general rule of thumb on getting out of long positions? 10 to 15% drops? No. So if you're in a long position and you're in that overbought range, what was a stock that we were just in that overbought range area of? What was I just looking at? Okay, I'm going to just go with Cardinal Health because I know it. All right, let's say Cardinal Health red line gets going up here like this, and it starts turning sideways on us. Then the red line is going to follow suit like that, okay? And of course, this red line, this 80% line, I'm going to draw it in blue, and it's going to be an extension across just so you can see it. As soon as this red line starts dropping, breaks under 80%, and the yellow line follows suit and breaks under. So now the yellow line is on top of the red, and we're under this 80% line. That's when I'm taking my profits. It doesn't have anything to do with 5%, 10%. I'm just doing what the chart tells me to do and getting out of it. So that's how you take profits on any stock that you're trading long term. Now, you could also, if you want to be extra conservative, once this red line gets up here and it just starts going sideways, let's say the red line goes sideways also next to it. As soon as the red line drops through yellow, say like that, let's say like that, but you're still over 80%, let's say you're still up here, that's perfectly fine. You can be extra conservative, take your profits there and go from there. So it gives you all different kind of things. Breve, if you go to the Discord, there's a setup of how to set up your charts exactly like mine, made by a Patreon. It's a PowerPoint, and it is excellent. Doesn't that look like 50%? Yep, you're right. You're right. Okay, let's see. I got 5 minutes left. Who's talking about? You guys want to know about AT&T? Why does everybody love AT&T lately? Guys, AT&T doesn't really move that much. I don't know what everybody's so excited about. I mean, if you're going to do something with AT&T, just do it. Don't trade this thing. Do it from a value point of view. What are you going to get out of this? You're going to go from $30 to $30.80. So you get 70 cents for all that work. There's 10,000 stocks. Go find a new one. AT&T is not a stock to trade. It used to be, but it's not anymore. So, CPRX. Okay, so as far as CPRX goes, we talked about this on the live stream the other day. They are a drug company that treats Lambert-Eaton syndrome, which is a neurological disease, which I'm not going to try to remember and talk about. Hit the like button, by the way. I've spoke to some physicians that have been in the industry, not academia. They've been in the drug industry, and they have said that those kind of companies that are rather small and treat rare diseases do have a better chance, because of the treating rare diseases, have a better chance of getting approved by the FDA. So take that for what it's worth. I do like the company. I'm going to go and look at options on it today, maybe sell some puts on it. But to me, I'm looking at, I think that's the kind of company that can get acquired, because I know their market cap was rather small when relatively speaking. CPRX. Let's just take a peek at CPRX. Market cap. Yeah, I mean, 439 million market cap. And I mean, I love their volume for the day. I mean, this is good. We have a small company getting 1.8 million trades per day. It's just great. So take what you like with that. Keep hitting the like button. Let's try to get to 100. I think we have 12 left or something. All righty. Better chance. Biogen getting approved. Well, I mean, you're revolutionizing an industry. So I think that what Biogen is doing is awesome. And if it fails, it fails. I mean, it is what it is. They're trying to go after something that there's no groundwork for. And frankly, I think that's a great thing for all of medicine, and especially the patients. And of course, investors will be rewarded very well. So, yeah. All right. I'm going to do one more stock, then I'm going to get out of here. Let's do GM because somebody just asked for it. Lilly Livestock, my newest patron. All right, here we go. So we're talking about that overbought range. Yep, you're in the overbought area. No big deal. Just make sure you're using stops up here. What do you need to do? Let me zoom out just a touch. So you have a power. We do have a power stock right now. This is the power stock that I wanted to talk about this morning. I don't necessarily like this. So power stocks are stocks that are over all four of their major moving averages and making new 52-week highs. And they are doing just that. I just don't like how wide it is, and I don't like how many times that the trend has changed. Anytime you see red here on my charts, it means that the trend has changed on our long-term trend. So what I usually want to see is I want to see green candlesticks going up like this, and I want to see a very, very tight cluster. So in my ideal world, this would all be green, and my cluster would look like that. I wouldn't have any of this on the sides. So this is not your most ideal power stock, but it is a power stock at that. But anyways, Mo has amazing muscles. Thanks. I love my muscles being complimented by men. All right. Thanks, guys. This is great. I will see you back on Monday morning for this. If you guys like this and want to keep doing, if you love this trading and stuff, we might go trade DD today. We're definitely going to make some money on Cardinal Health. Jump into the Bid and Ask Nation. It's $55 right now. I think there's less than 10 spots remaining. Once that's gone, that price is going up. Eventually, you guys will have charts that look exactly like mine. And yeah, that's it. So you guys have fun out there, make some money today, and I'll talk to you later. See ya.